The stock market is starting to make some big red candles. It's starting to get uglier by the day. That's when you know things are about to get very interesting in the markets. Now, was this just a fake out move designed to trap the bullish investors near the all-time highs, or is this just a minor pullback for a larger move up? That's what we're going to talk about in this video. Before we do, make sure to click the like button below. It really helps our videos get pushed out by YouTube. Now, without further ado, let's get right into it. Now, the first thing I want to cover right now is the risk we have in the markets. The number of cases is back on the rise. A couple of weeks ago around here on gameoftrades.net, we posted an article saying that the number of cases was poised to rise again in the United States. And that was a risk to consider if you were going long in the markets. And that remains true today. Now, we are still in a steady trend. We're not in parabolic moves like we were right here during June and July, but it is something to watch out for. Those parabolic moves right here, those are what worry investors, because that's when additional measures will start being implemented, either at the state level, at the federal level, or both. So this is the risk we have to consider if we want to go long. And if you've been following this channel for the past few weeks, even few months, that's exactly what we're doing. We still have a historic amount of liquidity pushing the markets up. We have no sign of panic in the markets just yet. And investors are still very fearful. Look at this. 36% bearish compared to 30% on average. And by the way, this ratio has closed the gap dramatically. 35% of investors being bullish right now. Just a few weeks ago, we talked about this ratio and it was around 20% bullish for 50% bearish. Look at how the gap has closed. And that's exactly what we've expected to happen for the sentiment to gradually flip to a more bullish one. And as this bullish sentiment continues to increase, we will be getting increasingly bearish on the markets. But right now, still more bearish investors than bullish ones. So it's unlikely the market has made a long-term top. Now let's get right into the important bit. We've analyzed the risk. We've highlighted the fundamental factors pushing the rally. Now let's see where the levels are. This is the most important level to look at. 3,400 points. That is a very strong level. We're looking at it. You should be looking at it. And as a trader or even an investor, you are looking to buy above support levels. And that's exactly where the market is right now, above a major support level right here. If we start to break down this level, we'll start to look for shorting opportunities in this area here. But for now, there's absolutely no reason to do that just above major support. All we see right now is a breakout and backtest of a strong support level. Now, the next question to address, and I'm going to zoom in, is this move right here ugly enough for us to forget about this breakout right here? So in other words, can we say that the current price action makes this breakout likely to fail? And so that's where Fibonacci levels come in. These are important. They give you proportional levels for pullbacks during an uptrend. So they're going to tell us if this is just a counter trend correction relative to this move right here, or if we've broken important Fibonacci levels. So we're going to take the fib levels from the bottom right here to the top over there. And so we can immediately see that the price has pulled back to the 38.2 retracement level. That is a very strong fib level. So this counter trend move is absolutely proportional to this move right here. In fact, this is going to act as support. So this is an important line of support right here. We do expect a bounce off this level. So far, this move right here is nothing to be alarmed about. I got a lot of comments already telling me that the markets are breaking down. But for us, until we've broken down below that significant support level, we can't consider this to be a breakdown. In fact, after such a strong move up, I mean, look at this move up right here. From the bottom to the top, a 10% move up in the markets. That is absolutely massive. We got in the move right here. We managed to capture the majority of this move. These were some big gains. So it is 100% to be expected to have a counter trend move after such a powerful move up. Now let's zoom into the 4-hour chart. That's going to tell us a little bit more about what we're watching exactly in our trading. So on gameoftrades.net, we were watching this trend line right here. We were waiting for a buying opportunity on a break above that trend line. We were watching, but it never came. In fact, we talked about these rejections of the trend line being very powerful. That's bearish price action. So that just shows you how important it is to wait for a buy signal and not jump the gun, buy just below resistance and then get rejected. And by the way, this trend line is still significant. So if we turn around, break out here, that's a nice buy signal. In fact, that's a very powerful buy signal, because in terms of patterns on this chart, and this is something we talked about on the site, we have a cup here and the handle right there, cup and handle. So that's a bullish pattern. It's a bullish continuation pattern where you have an uptrend, the pattern, a breakout, and then the continuation of the uptrend. And in fact, we have almost a perfect bull flag on this chart. You can take this line, copy and paste, and see if it's parallel to these support levels right here, and it absolutely is. A gap up, that's a reaction right there. Support. So again, we are at support relative to this line right there. We can even say this is a nice price level support. As we said, it's a Fibonacci support level. So this is going to trigger a bounce. Now the question is it going to trigger a bounce powerful enough to trigger a buy signal and trigger a large move up? That's something we have to wait and see. At the end of the day, the market will do what the market does. So even though this is a nice setup, we can get a rejection, break down, and then we'll step back, look for new opportunities, wait for clarity in the market, and get back in. Now, in terms of measured target, if we take this bull trap for what it is, that could lead to a very powerful move up. That's the flagpole right there, and that'd be the measured target right here. So we'll zoom out. That takes us to almost 3,800, which is a target that we've mentioned before. Again, let's not jump the gun. We haven't had a buy signal yet, so nothing to get excited about just yet. These patterns don't mean anything, and I can't stress this enough. These patterns don't mean anything until you actually get the breakout. These are just potential patterns until you get that buy signal, and that's when they're much more likely to actually play out. Now, we talked about the fundamental risk at the beginning of the video, the number of cases on the rise. That is definitely something to watch. And I want you to watch something else on the weekly chart. This is something we've talked about a lot. This is one of the most important lines right now on the S&P 500. This line of resistance that goes back the entire bull market. The price gets rejected off this trend line over and over again. In fact, the all-time high we saw right here was a false breakout. You can see the candlestick wick right here, and then a powerful rejection. And we've just gotten rejected off that trend line again. And this, so far, to say the least, is a powerful rejection off a significant resistance level. So this is huge technical development. If we start breaking down below 3,400 points, this starts to look more and more like a real rejection that goes through significant levels. So that's absolutely something to watch. And that's why anyone who's trading the S&P 500 right now has to be quick on their feet, especially if you're looking for upside right below major resistance. That's a risky trade to take. And by the way, on the NASDAQ, it's a completely different picture. We have that same trend line, but the NASDAQ already took it out a few weeks ago, broke out, back tested successfully, and is significantly above it right now. Whereas the S&P 500 is struggling below resistance. So we took a look at the fundamental risks in the market with the number of cases on the rise again. And this is the technical risk if you're looking for upside. This is absolutely not to be underestimated whatsoever. And that's why I say if we break down 3,400 points, we're going to be looking for shorting opportunities in the market. We don't want the price to go below that. That's not good for the bullish case. Now, this video was sponsored by PrimeXBT. Now, listen up, because I know this is going to be something interesting to a lot of subscribers. They have a Covesting feature on their platform. So you can go on their platform and find outperforming traders and copy their trading activity. So it's really simple. It's easy to use. It makes you see different trading strategies, different portfolio diversifications. So it can be profitable, it can be educational. And by the way, if you are a trader and you've become profitable through watching our videos and the content on the website, you can go on their platform and grow a following and receive success fees from your own trading. So make sure to go check that out. It's a very interesting feature. The link is in the description below. Now, I hope you guys enjoyed this video. If you did, make sure to drop a like on this video. In the meantime, good luck on your trading and see you next time.